Hello viewers, we'll be going over gold miners, ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for GDX. So back to the technical analysis, we're currently up 1.4% on the 1 hour chart. We were at overbought RSI early this morning. However, we are now resting along the 9 moving average, this blue line. If we expand out further onto the 4 hour chart, we are still at overbought RSI, and at the moment we're still quite away from the 9 moving average, acting as our next possible support. As for the daily chart, what we have here, on daily RSI we see it near at overbought RSI, and at the moment we were about to converge back in July 16th. However, we since reversed and bounced right off the 9-day moving average, this blue line. So if we do manage to reverse and head down lower, the next possible support will be around a price of $37.50. That coincides with the 18-day moving average, this purple line, and previous support levels that dated back all the way to July 10th. So that will be our first immediate support if we do reverse down lower. At the moment, there is still continued upward momentum, and let's head to the day-by-day probability model. So these models are available in the link below, so do check it out. As we progress to the 5th day or week of trading, we have a 33% chance for GDX to climb between 0 to 6% and a 7% for it to climb between 6% to 12%. And to the downside, we have a 53% chance for it to fall between 0 to negative 6% and a 7% for it to fall between negative 6% to negative 12%. So now let's examine the day-by-day forecast for GDX. So what we have here is 1 day out will be a Wednesday and 2 days out will be a Thursday and so on. So we have 3 days out, 4 days out, and 5 days out. Which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Our current trend is this blue line, and overlapping it is a trend that happens to be the best match. So right below is the current trend, and the trend under it is a trend that we found in the line graph above, and this trend dates back to February 26 to May 22nd, 2009. So let's begin comparing both of the trends. So we start off at the upper middle Bollinger Band, and then we also ended near the upper Bollinger Band towards the very end. And we also have 1, 2, 3 points, and the trend below. We also start off at the upper Bollinger Band and also ended up above the middle Bollinger Band. And we have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was back in February 26, 2009 to May 22nd, 2009. Back then, GDX continued to climb higher, around 3%. If we head back to the day-by-day probability model, that coincides with this standard deviation of 33% chance for it to climb higher between 0 to 6%. Let's examine closer on the technical performance of each trend. So the model that we're currently in, we're 0% away from monthly high, up 20% from monthly low, up 4.6% from 10 simple moving average, up 9% from 20-day simple moving average, and up 14% from 50-day simple moving average. Compare that to the trend in the past. Back then it was 0% away from monthly high, up 30% from monthly low, up 8% from 10 simple moving average, up 14% from 20-day simple moving average, and up 18% from 50-day simple moving average. So among the two trends, there are technical similarities. Again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.